You don't lose money because your entries are bad. You lose money because you are afraid of profit. Not losing money, losing profit. There is a difference, and that difference is costing you more than you realize. You enter a trade, price moves in your favor, you see green, and instead of confidence, you feel tension. Your breathing changes, your attention narrows, your mind whispers, "Take it. What if it reverses? Don't let it turn red." So you close. Small profit secured, temporary relief. But relief is not discipline. Relief is escape from uncertainty. And over time, this pattern keeps you small. Let's expose what is really happening. When a trade goes into profit, something subtle occurs. Your brain shifts from opportunity mode to protection mode. Because once you see profit, it becomes yours psychologically, even though you haven't closed it, even though the trade is still open. Your mind labels it my money. Now any pullback feels like loss, and the brain hates loss more than it values gain. This is called loss aversion. But this is not theory, it is biology. The pain of losing $100 is stronger than the pleasure of gaining $100. Now imagine watching profit shrink in real time. Your brain reacts as if something is being taken from you, even though nothing was secured. That discomfort drives premature exits. You think you are being disciplined, you are being afraid. There is a difference. Discipline follows plan. Fear seeks comfort. And when you cut winners early, you are choosing comfort over edge. Let's go deeper. Why does holding a winning trade feel uncomfortable? Because profit introduces uncertainty. When you are flat, there is no pressure. When you are losing, at least you know the direction. But when you are winning, you are suspended in possibility. It could grow, it could reverse. You don't know. And the human mind does not like not knowing. So it resolves the uncertainty by closing. It converts possibility into certainty, even if that certainty is small. Small profits feel safe. Large profits require endurance. That is the psychological divide between amateurs and professionals. Amateurs manage emotions. Professionals manage probability. Professionals understand something that most traders never internalize. One trade does not matter. But you don't believe that. You treat each winning trade as precious, scarce, rare. You think, this might be my only good one today. That scarcity mindset makes you defensive, and defensive traders never let winners breathe. Let's confront another truth. Part of you does not trust your edge. If you fully trusted your statistical advantage, you would allow distribution to play out. But because you secretly doubt it, you cling to whatever profit appears. This is not about charts, it is about belief. If your belief in your system is unstable, your exits will be unstable. Confidence is not loud, it is patient, and patience is visible in how long you can hold discomfort. Now let's examine the emotional sequence. You enter, price moves in your favor, dopamine spikes, excitement builds. Then price pulls back slightly. Fear replaces excitement. Your internal dialogue begins. What if this is the top? What if I lose it? Your heart rate increases. Now you are no longer observing, you are protecting. You close. Relief washes over you, but relief reinforces the behavior. Your brain learns closing early reduces stress. So next time you close even earlier, and the cycle continues. This is emotional conditioning. You are training yourself to stay small. Professionals interrupt this cycle, not with willpower, with structure. They predefine exit criteria. They decide in advance where to take partials, where to trail stops, where to exit fully. And once the trade is active, they do not renegotiate, because renegotiation only happens when fear is present. Let's address the myth of locking in profit. Locking in profit feels responsible, but if your edge depends on asymmetric winners, and you consistently reduce those winners, you mathematically destroy expectancy. You cannot have small average wins and large average losses, but that is exactly what premature exits create. Small wins, normal losses, negative distribution. And then you blame strategy, when the real issue is exit psychology. Holding a winner requires a specific mindset. You must accept temporary givebacks. You must tolerate pullbacks. You must endure unrealized fluctuations. Most traders cannot, because they monitor profit tick by tick, and the more you watch it, the more emotional you become. Observation amplifies attachment. Attachment amplifies fear. Fear shortens holding time. This is mechanical psychology. Let's talk about identity. Winning feels validating. You want to secure that validation. You want proof that you were correct. But professionals do not rush to validate themselves. They let the market validate over time. There is a difference between needing to win and letting probability win. If you need immediate reinforcement, you will never experience compounding, because compounding requires endurance. Now let's confront the deeper issue. You are uncomfortable with uncertainty in success. You can tolerate uncertainty in failure, but uncertainty in success feels unstable, because growth requires expansion, and expansion feels risky. So you shrink it, you cap it, you control it, you stay within emotional comfort range. But comfort does not scale accounts. Discomfort does. The market does not reward comfort, it rewards consistency. And consistency requires that you allow your edge to express itself fully. That means some trades will reverse after large profit. That means some winners will shrink before expanding. That means you must sit through noise, not react to it. Ask yourself this: if you cut every winner at the first sign of discomfort, how will you ever capture a large move? Large moves do not occur in straight lines. They breathe, they pull back, they test conviction. If you cannot endure that test, you will always exit before the expansion. Now let's introduce the professional shift. Instead of asking, how much profit can I protect, ask, is my original trade thesis still valid? That is the only question that matters. Not how much green is showing, not how it feels, only structure. If structure holds, the trade holds. If structure breaks, you exit. Emotion has no role in this decision. This is not about becoming emotionless. It is about becoming process-driven. Your job is not to maximize emotional comfort. Your job is to execute your statistical edge over a series of trades, not one. When you internalize that one trade is insignificant, you stop suffocating winners. There is one final confrontation. You say you want big results, but your behavior shows you prefer small safety. Big results require tolerating volatility. Small safety requires constant reassurance. You cannot have both. Every time you close early, you are voting for safety over growth. That is a psychological choice, not a market one. The solution is not to just hold longer. The solution is predefine exit rules. Stop watching tick by tick. Accept temporary givebacks. Detach identity from floating profit. Think in distributions. And most importantly, accept that some profit will evaporate, because the cost of capturing large moves is tolerating temporary discomfort. The day you stop closing trades to feel relief is the day your equity curve begins to expand. The day you trust probability more than emotion is the day winners begin to breathe. The day you accept that profit must fluctuate is the day you stop suffocating it. You are not bad at entries. You are fragile at exits. Strength in trading is not about prediction. It is about endurance. Endure uncertainty, endure pullbacks, endure emotional noise, and let probability do what it was always designed to do: work over time. Small profits feel good. Large profits feel uncomfortable. Choose your discomfort wisely, because one leads to stagnation and the other leads to growth. The market does not cut your winners. You do. And until you confront that, your results will reflect it. Stop protecting profit. Start protecting process. And your winners will finally have room to grow. I'll see you in the next video.